Okay, Assalamualaikum and hi everyone. Okay, today we will continue with our part 3 for this chapter, which is the cost of the capital. So, the thing that we will cover in this video are the circumstances used WACC in investment appraisal and the application of CAPM in project specific cost of capital. So, circumstances ni lebih kepada theory part yang you kena tahu ataupun you boleh baca by yourself apa circumstances in using WACC in investment appraisal, and the application I will try to explain to you in this video. So, the first thing that you have to know in circumstances uses WACC in investment appraisal. Okay, actually the first thing yang you kena tahu, is it important untuk kita ada WACC? Okay, it is important. Dalam reality, actually the company use WACC to measure its project, ataupun dia guna WACC untuk tahu whether how much the cost of the project untuk the firm akan invest ataupun akan cost to the firm lah. Okay, actually they have circumstances in using the WACC. WACC was based upon firm's current cost of equity and debt. It is therefore appropriate for use in investment appraisal provided. So, ini adalah appropriate for use of investment appraisal provided. The first is proportion of debt and equity or existing capital structure will be maintained. Ataupun same financial risk. Maksud dia, debt to equity tak berubah. It is maintain. Samalah proportion untuk debt dengan proportion untuk equity adalah sama. The second one, the operating risk ataupun business risk of the firm will not be changed. Apa maksud dia kat sini? The project has same business risk as the company. Generally, this means that the project is similar to the current operation. Contoh, kalau the business atau firm tu dalam construction and project dia pun on the same, which means project of the company have a project of construction juga, so it means that it have a same operations, so the operating risk ataupun kita boleh consider as the business risk adalah sama, so it not be changed. And the third and fourth we can conclude as one, which is the finance is not project specific, which are financed from a pool or funds. The project is small in relation to the company, so any change are insignificant. If this were not so, the project could cause a change in perceived risk of the investing company, making the existing WACC an inappropriate discount rate. Maksud dia kat sini, projek tu terlalu kecil ataupun projek yang sedia ada tu tak terlalu berjaya untuk mempengaruhi dia punya net income, ataupun dia punya projek tu kecil until tak ada perubahan yang berlaku terhadap dia orang punya return earning. So, it is a part of circumstances uses WACC in investment appraisal. Okay, so next thing you have to know, is there a capital structure which might minimize the WACC? Okay, kita kena tahu, is it as kita anggap kita as a firm, is it kita kena minimize the WACC? Actually, as a company, we should minimize the WACC. Kenapa? Sebab WACC is a cost. Kita kira WACC sebab kita nak tahu cost untuk kita invest dalam new project tu berapa banyak. So dalam kes ni, kita kalau selagi boleh minimize WACC it is benefit to the company lah. So as you can see here, kalau WACC decrease, kita punya NPV ataupun kita punya net value and company value akan increase. So as the value of business is the total value of each project, the shareholder wealth is maximized. Ni adalah dia punya consequences. Maksudnya kalau WACC decrease, NPV project akan increase. Bila NPV project increase, market value of company akan increase. Once the market value company increase, the shareholder wealth is maximized. So therefore, company should try to minimize the WACC. So sebanyak mana yang kita boleh minimize the WACC, it is good for our firm. So the project must earn enough to give a positive NPV when discount at the project specific discount rate. Okay, so for estimating cost of equity, we have learned that there are two models, which is DGM, dividend growth model, and the CAPM, which is capital asset pricing model. So CAPM, you already learned in our topic 2, which is in the topic risk and return. So the thing that you have known, the CAPM can be used to calculate a cost of equity. Required rate of return on equity. It is incorporate risk. The CAPM is based on comparison of systematic risk of individual investment and the risk all shares in the market. Okay, so this one is related to the topic risk and return in chapter 2 that we already learned in the previous chapter. So this one, CAPM is also used to find a discount rate when the project risk is different from that the company normal business risk. This one, the reason why we use the CAPM in this chapter. So the first, yang atas ni, kita nak calculate dia punya risk. So kalau dalam formula, beta is the purpose we calculate untuk kira dia punya systematic risk. Tapi for this chapter, we use CAPM sebab kita nak tahu to find a discount rate when the project risk is different from that the company normal business risk. Okay. For example, basically we apply CAPM to calculate cost of equity. When company want involve atau join into a different business, which means that the business that is outside from the nature of the business. Okay, contohnya, business company tu adalah construction dan projek yang dia dapat semua mostly adalah project construction. Tapi bila company want to expand dia punya business into another business yang lain daripada dia orang punya nature of business. For example, company tu construction and then dia terus nak expand dia punya business, nak buat dalam food and beverage. So it's totally different daripada usual. So we can conclude that the business risk have been differ daripada normal business risk. So kita bila ada different business risk ataupun different business yang company tu nak buat daripada dia punya nature of business, kita tak boleh use WACC, weighted average cost of capital. Kita kena use CAPM sebab dalam CAPM kita dah this one, it have been highlighted that when the project risk is different from that the company normal business risk. So, bila company tu nak buat project yang bukan dia punya nature of business, kita akan use CAPM. So, apa formula yang diguna dalam CAPM? It's still the same, required return RI or KE equal to risk-free return plus risk premium. Ataupun you boleh refer this one. So usually kita akan guna KE untuk this chapter sebab RI kita dah pakai dalam chapter 2. Okay, so you can read by yourself. RI is cost of equity capital, RF is risk-free, RM is return for the market as a whole, and B stand for like usual lah, beta. Okay, so in CAPM, there are some assumptions dalam CAPM. So the first is well-diversified investor. Second, perfect capital market. So there's no tax and transaction cost. Information available to all investor. Maksudnya investor dapat semua information yang diperlukan. So dalam market, information have been disseminated to the others. And the third is investor are rational and risk averse, and the last one, large market. And the third, unrestricted borrowing. So unrestricted borrowing or lending at the risk-free rate of interest. Maksudnya kita boleh buat pinjaman at the risk-free rate of interest. All forecasts are made in context of single period transaction horizon. Maksud dekat sini, apa-apa yang kita buat, transaction yang kita buat is not for a long term. It is for the short term only. And to evaluate a project with a different risk profile, a company will need to find a suitable beta factors, iaitu beta baru. Maksud dia, bila, for example, right here, normal business construction, and they have a new business. Bila dia ada new business, it is different from the usually nature of business. So, kita kena cari suitable beta factor for a new investment, and these are best estimated by reference to the existing companies operating in such particular business area. Ataupun business baru kita boleh kata as a proxy company. The beta value measures the systematic risk. This one we already learned in the risk and return, appropriate to share or for a project. This one is to share for a project. Okay, so this can be incorporated by using higher B, beta, which means that gear beta. Gear beta ni maksudnya the company ataupun syarikat tu ada hutang. So, ini yang kita classify as sebab company is partially financed by debt. So, shareholders should require a higher return because they now suffer both business risk and financial risk. So this can incorporate by using a higher beta ataupun known as geared beta. Okay, so this is the application of CAPM in project specific cost of capital. Okay, so first thing you have to know what is the formula for the beta for no tax and for the beta with tax. Okay, this one have show what is stand for. VA stand for market value, VD stand for market value of debt, BA untuk asset beta, and BE for equity beta. So, BA, the asset beta is the beta value that capture business risk arising from the asset of the business. Okay, so the alternative name for it is ungeared beta. So we known as BA is ungeared beta. For BE, equity beta value has captured both of risk, business risk and financial risk. Sebab beta kan kita calculate on the risk. It will give the return required by an equity shareholder in a company that is geared. An alternative name is a geared beta. Maksud dia, sebab equity lebih kepada hutang. So kita akan capture on the business risk and financial risk. Okay, so after you have classified what is BA, BE, you have to follow the step to determine the rate of return for KE. So, KE ni kan yang kita nak kira untuk CAPM. So, you have to first find out the BA. BA, which means the new project, ungeared or degeared. Okay, ungeared juga kita boleh call as degeared. And adjust BA to get a new BE. BE is beta equity ataupun kita call as regeared. Okay, dia ada dua nama, geared beta ataupun regeared. Kalau this one ungeared ataupun degeared. So kita akan use the formula CAPM untuk cari KE. Okay, so there are dua situations. Kalau no tax, kita akan use the formula. Kalau with tax, we have to use this formula. I hope that everyone can to come out ataupun list out the formula so that nanti you takkan confuse. Okay, so let's go to the example. Okay, this is example 1, which means that project specific discount rate, no tax. Maksud dia, the company A intends to undertake a project in unrelated industry. The risk-free rate is 4%. The average return on the market is 12%. Ignore tax. So this row, ignore tax. The following details are relevant. Calculate the project specific discount rate. So, tips pertama, macam ni kita nak tahu dia nak buat business baru ke tak. Tengok, company A intends to undertake a project in unrelated industry. So the word unrelated industry ni, maksud dia nak change lah dia punya business. Dia dah tak nak, mungkin dia nak try untuk involve dengan the others business. So ini yang dia is a keyword untuk kita classify whether the project is in the business atau tak. The risk free dia dah beritahu 4%. And the average return on the market adalah 12%. So ini adalah item yang dia bagi, BA untuk company 1.2 and proxy company ataupun project baru, new company 1.4, the value of equity, value of debt. So dia dah bagi everything. You have to put it, you have to calculate. So proxy equity beta 1.4 dia dah bagi. Value untuk equity of proxy adalah 800 and value of debt proxy adalah 500 dia dah bagi. The new information dia dah bagi everything. So step 1 we have to find BA. So macam mana kita nak find BA new project, which mean that we take this one, the info, we calculate the formula of BA. So formula of BA ni sebab dia kata ignore tax. So kita ambil formula yang tak ada tax. Okay, tak ada tax. No tax. So BE times with VE. So beta equity times with value equity divided by value equity plus with value debt. So you will get the BA is 0.86. Okay, the next step, adjust BA to get new BE ataupun recreate in our capital structure. So kita dah jumpa BA adalah 0.86. Value of equity company A 1000, value of debt of company A adalah 400. So kalau you refer back to the questions, you refer to your slide, kita akan choose the company A punya, this one is dia punya business nature. So you have to put BE equal to BA VE plus VD divided by VE. So macam mana you nak jumpa formula ni? So kita ubahlah dia punya susunan. Maksudnya kita nak cari BE so that kita rearrange balik dia punya formula. So sebab tu dia punya formula akan jadi macam ni untuk cari BE. So after we dah jumpa kita punya amount of BE, step 3 kita kena use the CAPM for KE. So apa formula KM? Adalah KE equal to RF plus B RM minus RF. So risk free kita dah tahu 4%, RM risk market 12%, beta adalah 1.2. So kita akan guna the amount beta yang kita dah kira untuk dapatkan BE ni. So BE yang kita akan gunakan, kita akan masukkan dia as 1.2 plus this one is kita punya RF plus with beta times with 12 minus 4 akan dapat 13.6%. This is how you want to calculate the CAPM. So first thing, sebabkan you have a new project, you have to calculate the new beta. Okay, so this is the second example. So kita boleh try untuk enhance atau increase kita punya understanding. So the second example is with tax pula. Macam mana ayat dia kalau kita kena kira with tax. Company A intends to undertake a project in unrelated industry, sama. Risk free rate sama. Average return market sama. Tax rate is 30%. So dia dah bagi tahu tax. So we have to calculate exactly same like yang macam kita buat tadi. So first step, find BA sebab new project dia dah bagi. So we just take this and calculate using the formula. Formula kenalah yang ada tax. Sebab dia bagi tahu kat sini tax rate 30%. So this one we have to include 1 minus tax rate. So the answer you will get 0.96. So I hope that sambil you dengar this video, you can do on the paper, you can do by yourself. Sambil you dengar ataupun you watch this video, you can do some notes and you can do this revision so that you will be more understand. Okay, so we go to the step 2, step 3, and it is a same way macam mana kita nak kira no tax tadi dengan with tax. Yang the difference is only on the formula. Okay, so bila kita dah kira untuk beta asset, kita boleh kira untuk new beta equity. So beta asset kita dah kira 0.96. And these two information is dia punya information based on nature business yang sedia ada. Kalau this company is construction, so this is the info of the construction, bukan yang baru, bukan yang proxy. Proxy kita dah kira untuk beta asset tadi. Okay, so kita just masukkan dalam formula. Formula ni mana kita dapat? Kita dah rearrange balik the formula biasa yang BA. So bila kita rearrange balik, dia sama macam kita ubah equation untuk maths lah. So this one bila kita masukkan ke atas, so dia akan jadi darab, and then VE bila kita bawa selepas sama dengan, dia akan jadi bahagi. So you will get these equations. So after you put all this information dalam formula, you will get 1.24, and then we will use the CAPM untuk kira KE. Risk free dia dah bagi 4%, risk market dia dah bagi 12%, beta which mean that kita dah kira tadi 1.24, and we just masukkan dalam formula CAPM, then you will get 13.92%, which means that this is the cost of capital yang firm tu kena hadapi. Percentage dia 13.92%. So this is the comprehensive example in these questions. So B company is a hot air balloon manufacturer whose equity to debt ratio is 5:2. The corporate debt, which assumed to be risk-free, has a gross redemption yield of 11%. The beta value the company equity is 1.1. The average return of stock is 16%. The corporate tax is 30%. The company is considering a waterbed manufacturing project. S company is a waterbed manufacturing company. It has equity beta 1.59 and equity to debt ratio 2:1. B company maintain its existing capital structure after implementation of a new project. What would be suitable risk-adjusted cost of equity to apply to the project? Okay, this is the comprehensive example. Usually, kalau dalam exam ataupun dalam test, dia akan tanya ayat yang macam ni, so that dia nak bagi you confused. Apa yang first thing yang I nak you buat kalau you dapat soalan macam ni, you try untuk keluarkan every information in the questions. The first one, kita ada dua company. B company, dia ada equity to debt ratio 5:2. So equity dia 5, debt dia 2. The corporate debt assumed to be risk-free has a gross redemption yield 11%. Beta of the company equity, so beta equity untuk company 1.1. Average return, so dia punya risk market RM dia 16%, and corporate tax dia adalah 30%. So the company consider untuk new project, which mean that dia ada project waterbed manufacturing project. So dia untuk project baru, dia ada beta of 1.59 and equity to debt ratio adalah 2:1, and B company maintain existing capital structure after implement of a new project. So we will see how they treat the answer. So first thing yang you kena tahu, find the PA ataupun new project. New project ataupun kita call as ungate atau degate. S company equity beta kita dah catat tadi 1.59, and the value of equity untuk S company 2, and the value of debt is 1. So, kita masukkan balik dalam dia punya formula untuk beta. So, apa yang you perasan yang beza kat sini? The difference adalah you have to include another one, which means that this one 1 minus TC. Dia kena ada satu tolak tax rate. Sebab tadi kalau you tengok previous slide, tax rate kita adalah 30%. So, bila 30% kita kena include, it means that cap M include the tax. So, this one dah include, cuma dalam formula je, dia tak tulis. So, you have to put here as 1 minus 0.3. So, you will have a 1.18. So, bila kita dah adjust, sebab this is the new project, which is water bag manufacturing. So, adjust BA to BE. New beta equity. So, beta equity adalah yang lama lah, hot air balloons. So, dia 5 nisbah 2 tadi. 5 is equity and debt is 2. And dia punya beta asset adalah 1.18 yang kita dapat daripada atas. So, you have to include into the formula and you will get the answer of the 1.51. So, the next thing yang you kena buat, calculate the cap M. You have to calculate the cap M pakai formula yang kita dah belajar waktu chapter 2 pun kita dah belajar, and then masukkan balik je risk free. Okay, after that you have to put in the return on the market yang dah tulis dalam soalan tadi, and the beta is yang kita kira, the beta equity yang kita dapat tadi, and you will get 18.55%. So this is how you rearrange back the formula to get the beta equity. Okay, so next is the comprehensive example 4 question, which means that this example have show the alternative when there is no VE plus VD. Maksud dia the value of equity dengan value of debt tak ada. So, and kita baca soalan dulu. An all equity finance company is in the food retail business and has a cost of capital 40%. It is thinking of expanding into selling clothing. The expansion would cost 1 million and would yield 250,000 per annum in perpetuity. So, an all equity listed company in retailing clothes business has beta of 1.5, risk market 16% and risk-free 4%. Which of food or clothing retailing is more risky? Is the project worthwhile? Okay, so kita akan menjawab dua soalan ni. Dia tak ada bagi value of equity plus value of debt. Yang dia bagi dalam food retail, okay, kalau in this case, bila you want to come out with the information, you have to divide, you bahagikan dua. Okay, perniagaan lama dia adalah in food and perniagaan baru adalah clothing. So, you divide into a 2 column and then you list out everything. Maksud dia, beta untuk clothing adalah 1.5, RM, risk market adalah 60% and risk free adalah 4%. Tapi kalau cost untuk capital, COC untuk food retail adalah 14%. So, kita kena try untuk figure out which one is more risky. Okay, this is the comprehensive example solution. So you can know or you can do some revision on these solutions. So let's we go through together. Okay, so in this slide have shown you the answer for these questions when there are no VE plus VD. Okay, so step first, in beta asset, for the new project, it has been given as 1.5. So the step 2, so kita tak payah nak kira dah dia punya beta untuk asset sebab dia memang dah bagi dalam soalan. So kita tak payah nak compute. Untuk second step, adjust BA to get new BE. So kita nak cari untuk beta equity. The food company has a cost of capital 40%. And required return yang kita dah tahu dalam soalan dia dah bagi. RF dia dah ada, dia dah bagi. Beta tak ada. RM minus RF. Okay. Yang kita tak ada information sekarang adalah beta. So, kita masukkan dalam required return punya formula. Kita masukkan, which means that required return is 14. Sebab dia dah bagi cost of capital here. So, we just include 14 here. Equal to RF. RF dia dah bagi 4. Plus dengan beta dia tak bagi 16 risk market minus dengan 4 risk free. Therefore, the beta equity untuk food company kita akan dapat 0.83. So, when the beta asset ada 1.5, B measures systematic risk. So, the closing business is riskier than food business. Kenapa kita boleh kata riskier? Sebab the amount of beta is more higher than food business. Sebab food business is kita punya nature business. So, memang kita dah biasa. So, this one can ensure that bila kita nak buat satu perniagaan yang baru, it is more riskier. So, the closing company has beta 1.5. So, macam mana kita nak use CAPM untuk kira KE? Kita ambil balik required return yang the formula is RF plus beta, and then we have to times with the risk market minus risk free, so we can get the percentage of 22% untuk required return. So this one, the NPV of the closing project equal to negative kurang 1 million plus 25 million as 0.25 million, you will divide by 0.22, which means that you have an NPV of 0.1364 million. Therefore, the project is worthwhile. Okay, so for the NPV of closing project, which is that this one, negative 1 million adalah expenditure ataupun initial cost yang occurred. And this one is a 250,000 yang dia dapat achieve ataupun dia dapat gain as a revenue. So, untuk dapatkan NPV untuk closing project, you have to negative 1 million sebab incurred cost plus dengan 250,000. So, you have to divide by 22% yang daripada required return. So, it means that your NPV here is positive. When it's positive, so the project is worthwhile. Okay, so kita back to these questions. So this is the answer untuk question 1 yang dia ada tanya, which of the food or clothing retailing is more riskier. So the most riskier is the clothing business. Okay, so for the clothing company has a beta of 1.5. Okay, some of the student might think, kenapa kita ambil beta of clothing then put dalam kita punya required return? Sebab in this question kita nak tahu the cost bila kita ada a new business. Sebab yang this one, the food company, this one is dia punya usual business. Tapi this one is the proxy company. So that's why we choose as 1.5 in these questions. Okay, this is one of the type question that might be asked in test. Tapi this question quite complex or need high order thinking skills. So sometimes they might ask on this question, sometimes diorang takkan tanya soalan yang macam ni lah. Supposedly diorang akan tanya direct je. Tapi in case that you got this type of questions, so you have to do like this. So this is the step that we have go through, and you may read by yourself. This is apa step yang kita dah buat untuk dalam application of CAPM. So any question you may ask on this related, is it just for your own knowledge. And I think that's all for this topic. It's quite a lot of information that you have to digest, and everyone can answer this question if you do a lot of exercise. Therefore, I will give you more exercise on cost of capital questions so that all of you may be more understand on this chapter. Okay, I think that's all for today. Thank you and have a great day.